1st of March 2023, Wednesday, MAO with Cal. Alright guys, first day of March, are you excited? Because S&P 500 must hold above 3940 today, tomorrow and other days. Why? Because this 3940 is a MA 200 level, and if the market breaks below this figure, there could be some serious selling because a lot of algorithms are already preparing hidden around the area. So once the market loses figure, the selling may be very, very scary. And of course, people have been asking me, is it time to add more OXY? I'll tell you more in details. All right, so let's go into play right now. Now, once again, please make sure you do your risk assessment, and thank you AIMS for the kind sponsorship. Now, there's someone that I'll thank here. Her name is Susan. Today is Susan's birthday. Yes, indeed. Once again, guys, happy birthday to you, Susan. Thank you for all the great things you did for us, and we're really thankful for this for entire TWB community. Alright, hope you have a great birthday today and enjoy yourself. And again, let's work hard together and get to where we want to go. Alright, once again, happy birthday to you, Susan. Alright, so that's the reason why today MAO started a bit late, because we had to wait for a little party for her. Alright, so while Susan gave her birthday today, she actually gave us a pretty good gift, because this morning, Susan gave a call. She says that the Hang Seng will be going up, and we also believe in that because our indicator shows that red turns to yellow and it broke above the MLP. And we all know that if the market can cross above 20,034, this will escalate higher. And that was where we went long into this. And of course, the community, more than 80 people, also saw it and witnessed it. And they know that there was a buy call. And of course, who profited? Yes, of course, we all profited it. The market went all the way up south. And in fact, as of now, the Hang Seng is trading at 20,700 area. That is amazing, guys. We have been telling you this guy Hang Seng will rebound, and it really did. And what's the real reason? Well, there's some rumors going on that Xi Jinping is trying to change and address a certain high stake difficulty and challenges, and probably the state fund came in and propped the market to make it nicer. But of course, will it sustain? I have my doubt. But nonetheless, today we make money, and thank you, Susan, for once again the great call. Alright, let's recap what happened last night. Well, basically the Dow Jones lost 233 points, the Nasdaq down 15 points, and S&P down 12 points. And interestingly, right, even the DAX is down slightly, okay? Dollar was also down slightly. So nothing caught my attention other than Meta. Now, Meta share went up by 3%, and the reason because there is the ongoing right now, the Congress in US is trying to ban TikTok. And if that happens, Meta will get some benefit of the crowd coming back to them. So, well, competition without in this way, not a very nice thing to do, but nonetheless, doesn't matter. But the problem is this, the market itself is down pretty flat and everybody just waiting for the big one to come. So the Dow closed more than 200 points lower. Major average ended February with losses. Okay, that means that we talk about Nasdaq, S&P, Dow Jones all ended with losses. Okay, I'll show you that later. So the thing is this, in January, we went up by 6%, right? So everybody thinks it's good. But since the moment that they notice that the inflation data are not coming down at all, and Federal Reserve have been increasing interest rate, that is where people get to worry. And when we get to worry, there's very soon there will be panic. So now the thing is this, although we know that the CPI data came from 9.1 back down to about 6.5, but the thing is this, we also saw the PPI data recovering, and we also realized that the PCE data is not really going down. So all this tells you that this February month is a real shocker here. And of course, if you're going to be a spillover, it could be March. So you look at it right now, right? Since the start of the year on the 3rd of January, this was where it went all the way up from the price of 33,130 to all the way to 34,000, right? That was how high the Dow went. But incredibly, after that itself, right, by mid-February, which I told you guys to be very careful, the selling came in and now it's trading below the start of the year. So if this is to continue, right, I still believe that we can see 30,000 coming in, and that's the same level that Michael Hanna is looking at, and for Mike Wilson, he is expecting a lower number. So yesterday, when I covered about Goldman Sachs, and I said that Goldman Sachs is having a problem, right, I received some messages telling me that, no, Cal, Goldman Sachs can't be wrong. Goldman Sachs is doing well. But if you look carefully, right, Goldman Sachs is actually one of the laggards in the Dow component stocks. And that's the reason why I'm telling you this. And in fact, United Health is another one. So this too is a very important counter, especially United Health. So if they are selling off, right, that means something is really very, very wrong in the market. And of course, when this professor came in, he felt that, right, Goldman Sachs, David Solomon has really lost. It's very distracted. Let's hear him out ourselves, shall we? Okay, let's bring the professor in right now.
both that he has the right strategy to get Goldman clicking again and that he's the right guy to do it?
I don't feel confident on either front based on today. I mean, it's really, you have to prove it with action over time. And one interview today isn't going to change what has happened over the last couple of years in terms of the way Goldman has performed and what's happened to its reputation and image over the last decade, for sure. So still a long way to go, I'd say.
How much time does he have to do the turnaround that you think is needed?
I don't think he's got much time. I mean, starting to get pressure from partners, if the culture is the same as I knew it, once partners start to rattle the cages, things are starting to go the wrong way for him. I think he could clearly turn it around. It seems sometimes like he's distracted with other things.
All right, so that's the point here. If this is going to continue itself, right, something is telling me that things is not going well. And if Goldman Sachs, one of the top investment banks, is not doing well, what do you think about the others? So you can watch the whole video later on. But my point is this, guys, this is something really very concerning right now. And because of that, right, people have been asking, then why the share market is going up? Well, I managed to find for you through another YouTuber. Apparently, there is a share buyback authorization since the February, all right? And you can see the amount is ridiculous. Oh my goodness, look at it. This is the biggest buyback authorization for the longest of time, biggest time. And this is really, really scary because if that is happening right now and the market is not moving, that means that very, very soon, if the market breaks some technical point, the selling can be really, really drastic, non-deniable. So that's the reason why this Mike Wilson from Morgan Stanley is so bearish. And again, they will like interview and they're saying that this rally is a bull trap and the valuation remain broadly elevated. All right. This is not a good sign because it said that, look, the EPS estimate has started to resume downtrend again, and that will pressure the market further. And S&P have been down for 3 straight weeks. That tells you something is very wrong and the market is actually selling. So all these things tells you that you need to be very careful. So now let me explain to you now very important technical aspect here itself. Okay, now guys, this is going to be crazy, guys. Look at the MA 150 and 200. They're so close to one another, and if you actually put and place the 200-day moving average, this figure will actually be around 39.40. Okay guys, this level, if it breaks, okay, there should be real selling. Now the last time we saw something like this was here when it broke below. Can you see that? Yeah, that's where it broke below the MA 200. Let me just change my color for you so it's easier to identify. And of course, this is the second one where it broke below the market sell. So for 2 times, the market actually sold here recently, right? Okay, you look carefully, it happened again right here and the market sold. Okay, all right, so 3 times over here, you move back all the way. This is the amazing part. This was the absolute high before the market crashed down all the way in, I believe that was in August, okay? The number was perfect and the market just cracked down all the way. So if you ask me right now, right, the market really has to hold. And if you look at this bottom here, this is the bottom over recently. And when we put the extension line up itself, you can see that the market actually rejected it perfectly last night. So again, this speaks volume. That means that something is going to happen tonight. 3940 is a very, very critical support level. The market must hold above it. If the market goes below it, right, selling can be really, really atrocious. Okay, so guys, be very, very, very careful on this. Okay, this one, please watch out for that. So guys, this is the number. Take note, yeah. So the thing is this, according to I think Mike Wilson, he says that, let me just clean up my chart a little bit. With uncertainty on the fundamental rally this high, the technical may determine the next big movement. And he mentioned that S&P had recaptured the 200-day moving average, which was 2 days ago. So if this is going to be a bull trap, the market will sell it back. And once the market loses the MA 200, there will be selling. And this is not kidding. So the level he was saying back then was 3900 for the first base. But to us itself, right, I believe the 3820 will be a second base that I'm watching, because based on Fibonacci, the market failed to cross above this area here. So let it buy right, it will come back down to this area. That means it come down all the way to here itself. So traders, be very careful on this. All right. The other thing is this is actually from the CTA side. You can see right now, right, the total buy side and sell side is very heavy. And the thing is this, if the market really goes up, the buying itself versus the selling is really big different. That means that the people who are betting on the sell side right now, it is like basically 10 times more than the buy side. This is really, really crazy. And of course, we can see very clearly that we have a big distortion in the global CTA positioning. So you can see that the gap itself is really, really big. And when that really happened, that means that the market is actually expecting something serious coming in. And of course, we all know that the main reason was because the Federal Reserve Fed fund rate have been increasing, going up higher than expected. All right, so watch this video to see what Bloomberg has to say. This is going to be a good, nice one video. Let's take a look.
On February 1st, the Federal Reserve raised the Fed funds rate by 25 basis points to a current range of 4.5% to 4.75%. This was the 8th straight rate hike, but the smallest increase since the first hike of the cycle back on March 17, 2022. At the time of the latest hike, the Fed's projections for a terminal rate, based on their dot plot, was 5.1%. Unfortunately, a lot has changed since then. On February 14th, the CPI came in higher than expected at 6.4%, above estimates of 6.2%. 2 days later, PPI also came in higher than expected. And then on February 24th, the PCE number, which is the Fed's preferred inflation measure, also came in above expectations. The Fed funds futures market quickly adjusted to the new data, and its projections for a terminal rate have risen from approximately 4.8% on January 27th to now approximately 5.4%. One of the interesting facets of this cycle has been the consistent disagreement between the futures market's implied expectations and the direct messaging from the Fed. The next meeting is on March 22nd, and the futures market says there's a 77% chance of a 25 basis point hike and a 23% chance of 50. What may be even more interesting, though, will be the Fed's own projection for the terminal rate, which had been consistently above market expectations and may go as high as 5.6 to 6%.
Well, I totally agree, but I don't think it's 77% for 25 basis point. To me, it's 100% for the 75 basis point and 25 basis point, yeah? And I think that, right, there will be a 50% chance you're going to see a 50 basis point, in my opinion. To me, it's all right. It's undeniable. There's no way we can get this out without having more interest rates. So guys, watch out for this. Now you can look right now, the Fed fund rate expectation has really dramatically changed, and most of the market is still looking at the 5% mark. But again, the numbers is moving. As you can see right now, it's increasing, and this is going to be there. And in my opinion, this is my final number. I know now it's a very low chance of it happening, most that no one expect that, but of course we need to really project. So to me, 6% should be the number that we're looking at by August 2023. All right. And of course, right now you can see that this is the open interest, and you can see it's really, really opening up. And this is not a good sign, because you can see the jump itself is really heavy. And if this is going to continue, I can tell you that, guys, there will be at least a 1,000 to 1,000 points, 500 points movement in the Dow Jones very, very soon. So this is the Atlanta Fed core sticky CPI, and you can see the number is just down so low, so slightly. Back in 2022, that was last year when the market was okay, you can see the data shot up. All right, this is not a good sign. That means that whatever Federal Reserve have been doing last year, increasing interest rate for the last 11 months, has not improved the CPI, what they call positioning. In fact, itself is getting worse. So although there's a little pullback, but once crude oil price goes back up again, things will just change again. So this is the Chicago Fed National Financial Condition Index versus the US dollar, and you can see again that it's a very clear cut that the numbers are showing downside. So which means that the NFC index, all right, both of them are all pointing downwards, and it's a matter of time the dollar will actually follow through, because that was what happened back then. And the thing is this, will the dollar actually do that right now? Because the dollar index is expected to go a bit higher. I feel that there will be a bit more upside. Then after that, the whole thing will come down, and that's where the real selling will begin. So guys, all these things tells you that this is not good at all. And of course, now we talk about the mathematics itself, that what's the probability of recession. You can see very clearly now we are at 65% average, all right, 65%. All right, even though Federal Reserve say no way, no way, no way, but we cannot lie to the market can see it. And in fact itself, right, using the term spread reading, we are also now at 60% level. So all these tells you that the chance of we escaping recession is really, really not possible. But of course, it may be mild, or it may be just a small one, but who knows, guys. Now, reason is because we know that the inverted yield has come in, and the Condorum spreadsheet tell us very clear that the market real hit recession, because the last time we see something like this, after a while later, about 1 year, we have recession. We see it again in 2020, we have recession. And of course, this one just slightly below the negative, we have recession. And of course, back in 1982 to 1984, the Paul Volcker time, that's where things get really, really crazy. So if you ask me right now, would there be a chance of no recession? It's impossible, because that is how world works, okay? Right, so you can see right now, the one of the biggest concerns that the US economy, instead of showing lackluster, showing that they are slowing down, no. Apparently, the January, the jobs growth, right, really tops all estimate. And now this is the Citi US Economic Surprise Index. It's very clear that the market has a lot of room to go before, can call for bottom buying. So that's why, again, all this information tells you that something is just very wrong. Now, how about OXY and Warren Buffett? We all know that Warren Buffett is just waiting for SEC to come back with the final verdict whether they can buy over the company. And I've been very, very clear, guys. I believe that OXY will be the next darling. And in fact, remember, I was saying that OXY, the first target was at 80. And of course, the next target can be as high as 100, okay? So the thing is this, why am I so bullish on crude oil? Well, it has to do with this. Now, the thing is this, the OXY, the earnings is not good at all. In fact, it's actually negative. So if the company is doing so badly, then why am I looking at this counter? Well, because I trust Warren Buffett a lot. I know that he hasn't sold yet, and I believe that the crude oil will be the catalyst for everything. And that's the reason why people are storing crude oil right now. So the thing is this, I don't have much on the detail, but you can see that the company is pretty focused. They know what to do. There's no hanky-panky. It's very clear, and that's what I like about the company. And also, very important thing is that they currently now, the fourth quarter, they have a bit of cash flow. Okay, that's 2.6 billion. And of course, we have the production teams of 1.2 billion, I think. All right, all this is telling you that things is doing well for OXY. So if that's the case, right, if it's so good, why are people not buying, right? Well, put it this way, the thing is that now people are calling for recession, so people doesn't really want the oil to be beside them. Now, because OXY, right, it has been blessed area, where it is situated right now, has all the protection needed. And of course, we're talking about production, meaning from other trials and stuff like that, or gangsters. So that's why they are looking at for Biden to approve on the solar panel, so that they can collect sun, and of course that will give them a lot of cost reduction again at the same time. So the question will be is that okay, there's something wrong with my mic. Okay, the thing is this, anyone buying? Well, this guy called Duan Yongping, he is actually from a chopping firewood background and become a billionaire. Now he says that, right, okay, he don't really buy into OXY, whatever Warren Buffett I buy. And we all know that when copying this Obama, you may not make a lot of money during a year, but you know that if you don't copy, you don't do those things, you get money with him and let you do what's his miracle, you can see your money really, really growing. All right, so let's take a look at OXY right now. You can see on the technical. Now, back then when we called for buy was somewhere around this area back in July, and we mentioned that about 76 level, you consider to take some profit. Not too sure you remember. Of course, I did say 80, but of course, M6 is done. And the worst thing is, other than the price have to come down, right? Can you see very, very clearly? So of course, I didn't know that this counter will go that low, but I did say that the counter can go to $58 would be good time to buy. And truth be told, right now, the OXY has hit $58. I think we can buy some. Of course, for people who still think that the market can go lower, you can try to queue at $55, okay? Now, volume has already surged up yesterday, so I believe that there will be traders coming in to come for support, yeah? So traders, watch out for this. This is not going to be a drilling exercise. This is actually drill yourself, okay? All right, so watch out for OXY, yeah? Okay. All right, that will be all for this side for the fundamental. I'll see you guys on the technical in a short while time. This is Kel signing off. Bye-bye.